Ladies and gentlemen, good day and welcome to Rainbow Children's Medicare Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, sir.
Thank you, Nirav. Welcome to the earnings call of Rainbow Children's Medicare Limited to discuss the financial performance for the first year ended June 30th, 2022. We have with us Dr. Ramesh Kancharla, Chairman and Managing Director, Mr. R. Gauri Shankar, CFO, and Mr. Saurabh Bhandari, Business Analyst. Before we commence, I would like to share that some of the statements made on today's call could be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q1 FY23 results presentation that is hosted on the company's website and the stock exchanges. I would now like to invite Dr. Ramesh to make his comments. Over to you, sir.
So very good morning, ladies and gentlemen. Welcome to quarterly call of Rainbow Children's Medicare Limited. I hope you are all well and healthy. So though COVID is still lurking around across the country, we continue to take measures like a mask. It's not COVID. There are many other viral infections what we witnessed today. So I'm sure it would protect us from the other virals as well. So this is our second conference call for since listing. I feel it's important to recap our model as some of you may be listening to us first time. Rainbow Children's Hospital Network comprises of 14 hospitals in 6 cities with a bed capacity of 1,500. Our pediatric services under Rainbow Children's Hospital include newborn and pediatric intensive care services, pediatric multi-specialty care services, pediatric quaternary care including organ transplantation. Birthright by Rainbow is an integrated perinatal services, which is obstetrics, offering normal and complex obstetric care, multi-specialty fetal care, and obstetric and gynecology from gynecology services. The Rainbow Children's Hospital built on strong fundamentals of multidisciplinary approach with a full-time consultant engagement model to serve 24/7 in a child-centric environment. These are the 3 fundamentals, are actually core fundamentals of a children's hospital. On this basis, the children's hospitals have been built across the world. To reiterate once again, multidisciplinary is something a very, very core philosophy of children's hospitals. The team of doctors have to work together to deliver a great results for sick children. And also the doctor engagement model has to be a full-time 24/7 because it's an emergency-based. Children-only environment, children-centric, makes really all the difference at the children's hospital. These are the core 3 fundamentals of children's hospitals across the world, what we see. It's a very differentiated model. So very organically built. Always we keep an institution-first approach and a very unique doctor engagement model who works as a full-time in teams rather than silos to deliver better results. We follow a hub-and-spoke operating model for the wider coverage of the city. The hub hospital provides comprehensive multi-specialty pediatric services with an advanced tertiary and quaternary care services, while the spokes provide an emergency care in pediatrics and obstetrics with a large outpatient services and inpatient services for obstetrics and pediatrics with a level 3 NICU services. Rainbow runs one of the largest academic training program in the country in the private sector, offering postgraduate residential DNB training program and as well as fellowship programs. Regarding our performance for Q1, I'm very pleased to share with you that we have witnessed our business normalizing close to the pre-COVID levels with all the operating parameters demonstrating a healthy growth compared to the previous quarters. with the schools having reopened across the country and children returning to a near normal life, we expect to see significant growth in our outpatient footfalls as well as inpatient admissions. In the current quarter, outpatient footfalls have witnessed about 52% growth compared to Q1 of the previous year. The Q1 also witnessed improved case mix, robust operating metrics, and the ARPOP stands at over 52,600. Excluding COVID vaccination revenue in the FY22 quarter one, Q1 FY22, the revenue for the current FY23 Q1 has grown by 17% compared to the previous year. We continue to demonstrate industry-leading the PAT EBITDA, ROCE margins. Our CFO will take you through the details in a while. Regarding our expansions, the growth plans of the company, I'm happy to share that we are going to commence our first spoke in Chennai in our OMR Road with 55 beds. It's going to be commenced in a month's time, in the second quarter of this year. Another spoke, which is in Hyderabad city of 90 beds, is going to be operational in the fourth quarter of the current year. So a total of about 145 beds are going to be commenced in this current financial year. So other two projects which are going to be commenced next financial year are one in Hyderabad in Central City and Chennai and Anna Nagar. So the works are progressing pretty well. We are hopeful that we may be operational by first quarter of the next year. So we have also signed two more hospitals, one in Bangalore as a spoke, and also regional spoke in Andhra Pradesh in Rajahmundry. To conclude, the year started off with a strong operating metrics, and we hope to continue the growth momentum considering a normal year. Our financial position continues to be strong with industry-leading EBITDA, PAT, and ROCE margins. On the growth front, we are working to ensure the timely execution of all the undergoing projects. I hope to speak to you in the second quarter with the great results. Thank you and have a great day. Over to Mr. Gauri Shankar, our CFO.
Thank you, sir. Good morning. So thank you for taking out your time and joining in our earnings call. I'm happy to take you through the financial results for a quarter ended 30th June 2022. It's the first quarter for the financial year 23. So in fact, it's a better quarter, and our pediatric healthcare services are doing better in this quarter. And I'll take you through the consolidated and standalone results for this Q1. So Rainbow Children's Hospital has achieved a consolidated revenue of 237 crores in Q1 of FY23 as against 246 crores of the corresponding quarter in the previous financial year. Compared to the Q4 of FY22, that is the immediate quarter, our consolidated revenue has shown a growth of 12%. So if we take out the COVID vaccination impact in the corresponding quarter of Q1 FY22, so we have a growth of about 16% in hospital revenue, that is to healthcare services, in the compared with the corresponding quarter of the current year. Our standalone revenue for the first quarter is at 222 crores. And our consolidated EBITDA for the first quarter is at 82 crores, which is again a post-Ind AS EBITDA. And this compared with the first quarter of FY22, with the EBITDA was at 78 crore, has shown a growth of 5%. So if we compare this with the immediate quarter, the sequential growth, we have achieved about 71% growth. So our EBITDA margin for the first quarter after FY23 is at 34.6% as against 31.8% in the corresponding quarter of FY22. So there is a good growth in the EBITDA in terms of margin. This is on account of our original or organic healthcare business is doing better. Our standalone EBITDA for the first quarter of FY23 is at 77 crores. So this quarter we have seen a better PAT margin. So our PAT margin for the first quarter is at 16.2% against 14.56% in the corresponding quarter of the previous year. So PAT for the first quarter is at 38.7 crores. So as against 35.8 crores in the corresponding quarter of the previous year. So there is a growth of 8% on year-on-year basis. And compared to the PAT of last quarter, the PAT has actually grown by 216%. The PAT for Q4 was 12 crores and current quarter is at 38.7 crores. Our standalone PAT for the first quarter of FY23 is at 37.5 crores. So Rainbow Children's Hospital has delivered industry-leading EBITDA as well as PAT margin. With respect to growth in volume, our OP volume has grown by 52% over the corresponding quarter of the last financial year. Our IP volume has grown by 22% and our delivery volume has grown by 12%. So this shows our normal pediatric business, our hospital business is coming back actually and post-pandemic. On the occupancy, we have seen an uptick in Q1 of the current financial year over the Q1 of the last financial year. So occupancy for the Q1 of the last financial year was at 40%. The current financial year, it is at 43%. So our matured hospital has done well and achieved an occupancy of 46%, and new hospitals has achieved an occupancy of 35%. With respect to ARPOB, so the Q1 ARPOB for the current year is at 52,003 crores. This is against Q1 of previous year, which is 58,986 crores. Yeah, rupees 58,986 crores. 58,986. So yeah, rupees, yes. Foreign currency. And so actually, if we take out the COVID impact in the previous year, our ARPOB has grown by 8% actually, which is due to the case mix as well as increase in the price. And with respect to our ROCE and ROE, so the Q1 we have achieved a return on capital employed of 5% and our ROCE is at 5.58%. So there is a cash balance available in the balance sheet to the extent of 400 crores. If we remove that, the ROCE will be at 7%. See, all these are not annualized. On an annualized basis, we have delivered 23% ROCE and 26.6% ROE in the last financial year. On the whole, our EBITDA margin, PAT margin, ROE as well as ROCE are best in class in the industry. Thank you once again. Now we'll open the call for your valuable questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Praveen Sahay from Edelweiss Financial Service. Please go ahead.
Yeah, thank you, sir. Thank you for taking my question and congratulations for a good set of numbers. My first question is related to the Malviya Nagar, New Delhi facility. Can you elaborate like what kind of a medical services means? Like you have not included 130 beds in your capacity even. So and where the revenue like of you account here?
So I'll take this question. Actually, we are the New Delhi Malviya Nagar facility is a DDA property. So we have a medical service agreement with the Madhukar Trust, and we charge 32.5% as a medical service fees, which is accounted in our healthcare service revenue.
The line for the participant dropped. Participants, you may press star and 1 to ask a question. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir. Thank you for the opportunity. Sir, it would be helpful if you could give the pre-Ind AS analysis of margin in the quarter 1 versus the quarter 4. And also, there was this price hike via the insurance route. Has it started to play out in the margins? That is my first question. My second question is, based on the whatever your capacity expansion plan that we have via function of addition in operational beds and the new beds that are going to come into the system, what is the kind of bed addition that we'll see in 23 and what is the bed addition that you see in 24?
So with respect to Ind AS impact, so we have about 14 crores of lease rental, which has got which needs to be adjusted to get the post pre-Ind AS EBITDA. So for this quarter, it is at 68 crore is a pre-Ind AS EBITDA. And with respect to the similar 14 crores, you have to remove in the last immediate quarter as well.
Okay. Has the insurance price hike started to play out in the numbers?
Yeah, it just began to play out in the numbers. It started with from June, and yes, some of the places. In some places still we have to close some insurance hikes, especially in Hyderabad. The Chennai, Bangalore, and New Delhi, we were able to close it, and I think we started with the new tariffs from the 1st of June.
Yes.
So now our pre-Ind AS margin looks like a number of 28-29%. If I adjust the rental part,
Yes.
Is this the number we can look to work forward, because this number is about 3-4% higher than the last year's number of 24-25% pre-Ind AS margin, if I'm not wrong.
You are right. Actually, last year we had COVID vaccine revenue, which has got less margin compared to hospital revenue. So that difference, is there actually.
Okay. And if you could tell in the last year's revenue, how much is COVID revenue, and what kind of growth do you see on the base business ex of the COVID, which is some total of obviously occupancy addition, OP volume addition, or via bed addition?
So please note, there is no COVID revenue, it is COVID vaccination revenue.
Yeah, COVID vaccination.
About 96 crores of COVID vaccination revenue was there in the last year on full year basis.
Okay.
So that was the only COVID vaccination revenue, which is a one-time impact actually, which we can take out actually. And otherwise, with respect to occupancy also, we are getting back to the normalcy. So the schools have opened, and then our occupancies are bouncing back to the normal. Though it is the last quarter as well as first quarter is subject to a seasonality, so we are seeing a better occupancy. So we used to have a similar occupancy pre-COVID actually. So now we are coming back to 40-45% occupancy.
What kind of growth do you see in the business, ex of COVID vaccination revenue?
So we have, we have delivered about a 20% growth earlier. So pre-COVID, now before 19, 20 and all. So we are expecting the similar growth actually in our business, because we are seeing that this year is going to be a normal year for us. So it's an organic year. So we are expecting to continue the similar growth.
Okay. And so lastly, had asked you on the bed addition. So what kind of bed addition do we look at in 23 and 24 in terms of proper operational beds? One either via the system beds getting operational or new hospitals coming in.
No, there's the bed additions are going to be in Chennai, about 55 beds. New.
Sir, I wrote that. I want the total bed addition for
about 145 beds are going to be commenced operational this year, current financial year. The next year, almost equal number, about 140 beds are going to be commenced 23-24 next operational year. So
nothing,
that's, about 280.
Nothing will get added from the existing hospital, because existing hospital you have 1,500 capacity and 1,150 operational. So nothing coming from there as well?
There will be about close to 24 beds going to be added in Bangalore, our hub hospital in Maratali area. So that work is in progress. That's going to be added soon, probably in about last quarter.
Okay. Thank you very much, sir, and all the best to you, sir.
Thank you. Thanks a lot. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Bansi Desai from JP Morgan. Please go ahead.
Hi, good morning, everyone, and thank you for taking my question. Firstly, congratulations on good set of numbers. My question is on occupancy. So when I look at your mature hospitals cluster, they've reported an occupancy of 46%. I understand that Q1 is seasonally a weak quarter. So can we assume that this number will meaningfully improve going forward? And for the mature cluster as a whole, by when should we see an occupancy level of 60% or so, which was a pre-COVID occupancy for some of our mature units?
Yeah, thank you, Bansi. Sir, the occupancies would actually be in a matured hospital will go past by 55%, because remember we are coming out of COVID now, and I think the anticipation is about mature hospitals probably will touch closer to the 60%, and maturing hospitals will touch. Consolidated, I think we will probably have about go past to 50% of occupancy. That's optimistic. It may be a couple of percent more, because the way it's looking now, with the seasons and also normalized business. So if we go back and see that pre-COVID levels, we were about 56%. So we are optimistic about consolidated at a group level occupancy. It will go past 50%. This is what our expectation is. It may be at 2% more than that, based on the season, how it's going to pan out next couple of quarters. So the matured hospitals are always kind of would definitely do that one. The maturing hospitals also taking quite well now. We are in the first quarter. I think that number is actually for me running the organization pretty impressive for 43%. So we are expecting a better growth.
Okay, so sir, on a console basis, fair to assume 50% occupancy level starting this year itself, right?
Yeah, I think we should be able to.
Okay, and secondly, sir, on the ARPOBs, these are strong numbers. So just wanted to understand, has the secondary pediatric business come back to normal level? So, are these ARPOB numbers sustainable from a case mix standpoint?
Yeah. See, what's happened is that now we are quite happy to see that the business has come back to the pre-COVID, very, very close to pre-COVID. Our intensive care started doing very well, which has got a high ARPOB. And our specialty pediatrics, like pediatric specialties, are doing very well. For example, we were doing about 30 plus surgeries, cardiac surgeries during the last year, and now it's kind of bounced back to 55 an average pediatric cardiac surgeries. And also our transplant work has gone up, and multi-specialty work gone up significantly. Secondary care is something which keeps fluctuating as per the seasonality. The secondary care pediatrics is more important for the spokes rather than a hub, because hub mainly occupies most of the complex and specialty case mix, plus obstetrics in the hubs.
Is it fair to assume that one should expect 6 to 7% growth on the ARPOB, which is closer to 52,000 that you reported in this quarter?
Yeah. I think the current quarter, which we compared to the last year, whole year of this one, so we were able to demonstrate about 8%. I think that if in the first quarter, if we are able to demonstrate this kind of growth, I'm sure, I'm optimistic about the year ahead.
Yeah. And just to add, Bansi, Saurabh here, whenever you look at ARPOB, please look at the annual ARPOBs and compare, because as you rightly mentioned, we have fluctuations in our ARPOB because of seasonality and the secondary care pediatrics, which are generally cold, fever, ARPOBs, which are slightly, which when their proportion increase in Q2 and Q3, the ARPOB slightly varies. So in our kind of business, what is important is to look at ARPOB growth on a YTD basis and not on a quarter-on-quarter basis.
Okay, understood. But even if I look at a longer term trend, which is, past 3 years, on an annualized basis, you have been able to report ARPOB growth of 13-14% over the last 3 years. So, just taking that into consideration, I was thinking that, is that kind of growth sustainable going forward, or should we expect a moderate 7 to 8% as Sir just mentioned?
So,
I would stick to 8% ARPOB growth, because that is achievable. I think that we're optimistic about 8%.
Understood. Thank you. I have more questions. I'll join back in the queue.
Thank you.
Thank you.
Participants, you may press star and 1 to ask a question. The next question is from the line of Praveen Sai from Edelweiss Financial Service. Please go ahead.
Yeah, thank you for taking my question again. I'm sorry about the last time I dropped out. Can you give me a seasonality in your business, on the quarter-on-quarter, which quarter is the best quarter and which is the lowest?
Yeah, generally, our business is like this: about 70% is pediatrics, 30% is obstetrics. The 70% pediatrics business, which carries the seasonality. The Q1 is generally a holiday season. Children go on holidays, and Q4 is exams times. And also, correspondingly, those quarters, you don't see a lot of environmental fluctuations. Generally tend to be a seasonal illnesses will be low. So if you look at an average Q1, Q4 together to Q2, Q3, the mid quarters, there will be a variation about 7 to 8%, the variation. So that's how it pans out. I think the Q1 and Q4 together somewhere around 42 to 43%, and the 50 rest of the Q2, Q3 will be a busier month because of generally rain, seasonality, onset of winter, and a lot of pediatric infections and various other ailments comes through the season.
Great, thank you. And for this quarter, do you see any, one-off in this quarter? Any surge in the elective surgery or something like that?
No, we haven't. We don't have anything one-offs now. It's a normal business which is coming back, which is why what we witness is that when we do our normal business, like a case mix of the intensive care, specialty pediatrics, and secondary care and obstetrics, we do a better ARPOBs and better EBITDAs.
Okay, great. And on the expansion side, how much is on a capex you are doing for this year and the next year?
We have about close to 380 beds, close to 400 beds, which is these are going to take about an average about 50 lakhs for some of the scopes, smaller ones. Larger ones takes about 60 lakhs per bed. So that's what is about 240, 250 crores is the capex, which is going to be deployed.
Okay. In that, as you had also mentioned, that's one Bangalore and the Rajahmundry you signed. So is that existing facilities where you are opening your, the segment, or is new?
Yeah, Rajahmundry is getting built as a greenfield project, and one in Bangalore also is getting built. Its permissions are already, the Bangalore one, they were already permissions, and Rajahmundry one, they have applied for permissions. I would expect Rajahmundry to be there in 2 years' time. Bangalore can be done much faster because it will take about 15 months or so.
Okay. Okay, that's it. I'll come in a queue. Thank you.
Thank you. The next question is from the line of Girish Bakru from OrbiMed. Please go ahead.
Yeah, just actually going back to the previous one. So you're saying there's no pent-up demand reflected in this Q1, right?
Oh, there's no pent-up demand. I mean, there's a pent-up. It's not a pent-up demand. It's just kind of normal business which we're coming back to after 2 years of period. And as a children's health care, I mean, across the world, there's children remain at home, no schools, no going out. So they've remained at home, which is why the pediatric business has been muted, overall spectrum of pediatric businesses. So which has come back in the last year. Last year we have done well in the revenues and the EBITDA, everything. So it was a bouncy year, but quarter-to-quarter variation was so much. That is because of pent-up demand coming back in. Whenever there is the COVID subsides for a few months' time, the surgeries have come back, and then all the specialties have come back. So this year, what we see is that overall we just kind of moved up the nation, the people is that yes, there is COVID is there here and there lurking, but it's not something dreadful anymore. That's what people's belief is that now the outpatients are coming back, inpatients are coming back, the normal pattern of business. But there is one thing what we see is that normal seasonal illnesses, which are actually presenting more pronounced in a way, in the sense that some of the viral infections which comes and goes may not require admissions. They are requiring admissions because some portion of the children we discovered they have a pneumonia needing admissions. So I think this year is going to be, I wouldn't say it's a bouncy year. We probably see some of the seasonality illnesses maybe more pronounced.
Mm-hmm. And when you say the case mix was better, I mean, logically, does it mean that more critical beds would be occupied? Like, would you be able to give color on that?
I think that kind of granularity is difficult. Our intensive care occupancies have gone up significantly, both newborn intensive cares, because the people are coming from the districts and far away from places for the intensive care services, and within the city also. And people have come back after a long time into the cities, especially Bangalore and Hyderabad. Till recently, they're all work from home. Today, most of even the IT companies have said, okay, come back to the city and work alternative days or 3 days a week. So the population has come back. That's what we see now.
But ballpark, would you be able to give, like, let's say 33% of your network is largely critical beds. What's the occupancy there previously and what is it now?
I think we have it varies from the cities to cities, and consolidated, I don't have a number at the moment.
ICU occupancy, Girish, would be in the range of 30 to 35%, or closer to that. We, as Dr. Ramesh mentioned, it is difficult to put a number to it, but a ballpark number would be closer to that, if we were to calculate that way.
Understood. So if I keep it
matured, everything together.
Everything put together.
There are hospitals in the cities. See, what we see in Hyderabad, we don't see in Bangalore. What we see in South, we don't see in Delhi. So this keeps changing so much because each city is different. But overall, what we see the trends is that there are occupancies steadily going up in the intensive care services, and newborns especially started having a much better occupancies than what we have seen entire last 1.5 year time.
Right. And generally, as a trend, of ICU occupancy will also increase in Q2, Q3, right?
Yes, of course. Yeah.
Okay. And just related to this, would it be possible to give some differential of ARPOB? How much would be the differential of ARPOB from critical beds to non-critical beds?
So the ARPOB difference, I'll just give you a ballpark estimate, Girish. So the quaternary care and the obstetrics, the women care, have the highest ARPOB. So these ARPOBs are higher than the company's ARPOB. So critical care, which is the tertiary care and women care, would be higher than the company's ARPOB, average ARPOB in the inpatient, and the secondary care is closer to 25,000-30,000 kind of ARPOB, and rest is the outpatient ARPOB. So if you look at it, you have the inpatient, quaternary care, tertiary care, and the women care are the ones which are at the group's average ARPOB.
Well, to put it broadly, sometimes why I'm saying not able to answer the question is that a child who gets into intensive care is a neurology child, or a transplant who stays significantly in intensive care and outside intensive care. So it's very difficult to differentiate specialties staying in intensive care, oncology patients staying in intensive care. So overall, how we actually look at it is for a better understanding of, eventually we need a better understanding of it. So when we look at our ARPOBs, the intensive care services and specialty services, obstetrics, all of them will have more than 60% ARPOBs generally. So when you look at the secondary pediatrics, the ARPOBs will be about somewhere about 30,000-35,000.
Yeah.
So combined blended adding plus outpatients revenue, when you add to that, so we get a very superior ARPOB, which is why this model has a better ARPOB, because we've got a 3 to 4 operating metrics are very superior, which is intensive care services, specialty pediatrics, obstetrics, plus our OPD revenues are significant. We actually are on a total of revenue, 28% is OPD revenue. So that gets significantly added to the ARPOB compared to the multi-specialty hospital.
The shorter ALOS, sir.
And shorter ALOS, of course. Shorter ALOS.
Mm-hmm. That's very helpful. And just last one. So, I understand mature hospital is at 46% occupancy now. Can you give occupancies in the two hubs, Banjara Hills and Marathali?
I think Banjara is a 20-year-old hospital. Occupancy would be about, it's about 70%, 74% in average occupancy. It's 70% plus it will be. And the Marathali will be about 45 to 46% occupancy. But that's still maturing. It's about a 5-year-old hospital.
So in your capex plan, there is no hub creation in next 2-3 years. Given that these two are already there, but you don't think you need a hub also?
Okay. So we're going to add probably beds in the hubs in moving forward. We try to create more beds in the same place where we are in hubs. For example, we're adding about close to 24 beds in Bangalore now, because we were looking at adding more specialties in Bangalore. We require more beds in Bangalore in the hub hospital. So Chennai, we are trying our level best to see that how to increase the beds, probably in a year down the line. So Delhi also we take the similar view. So hubs expansions will take care, we need to look at the feasibility of adding beds and various other factors. But we wish to kind of increase the bed numbers as the business grows, as the more specialties get added.
Thank you. This was very helpful. Those are my questions.
Thank you.
Thank you.
The next question is from the line of Prashant Kutty from Sundaram Mutual Fund. Please go ahead.
Yeah, hi. Thank you for the opportunity, sir. So first of all, just missed out if you had given the number of what was the COVID-related revenues in the base quarter.
No, actually, it is a COVID vaccination revenue of 44 crores was accounted in the corresponding previous quarter in Q1. So there is no other COVID revenue.
And was there any COVID revenue in the previous quarter?
Yes.
And it's a dominantly a vaccination revenue, what we have seen.
Yeah. I'm asking about vaccination, yeah.
Yeah, vaccination.
How much was that in the previous quarter, sir? You said base was 44 crores. In the Q4 was how much?
It is about 4 crores.
Okay. So, and in this quarter, I believe nothing is there as far as...
Well, it's nothing significant. Maybe, I think, less than a crore, I think. See, what happened is COVID vaccine season. Number one is, with so much government has procured COVID vaccinations. Their vaccinations are given everywhere at free of cost. So why would they come and pay it? Number two is that the pricing has come down so low. So therefore, that you already have your business, that you wouldn't be kind of going out to do the COVID vaccinations anymore. So the interest levels have gone down significantly, even for children. This is a surprise to me, on a different note, that we thought that there's going to be a lot of demand for the COVID vaccine in children, but there's not much. And even the government is not, despite the developed countries said up to 5 years to give COVID vaccinations. Still, Indian government has not decided to give less than 12 years the vaccinations. Parallelly, the interest levels have also significantly gone down because people are not seeing that COVID as a serious disease in all children.
Understood. Sir, the second question over here was in terms of, you said the RBOP, obviously, a lot of the price hikes have largely happened. And you said that typically you would want to maintain about a 7 to 8% kind of an RBOP increase. Are there any of the places where insurance is expected, or is largely everything done? And typically, what's the duration of the insurance hikes? What typically happen?
Well, it's supposed to happen at 2 years' time, but I think the insurance companies are behaving very differently. So because they had to pay a lot of money towards adult COVID. So they are becoming increasingly difficult. Supposed to be 2 years, but it gets extended sometimes 2.5 years. It can be even 3 years' time.
Okay. So typically in a year like this, where last year you already got your insurance hikes in most of the places, I presume, this year when I'm talking about an 8% RBOP increase, it is largely going to be driven by case mix and in general, right? Or would there also be a pricing element?
Prashant, sorry to interrupt you, but we are losing your audio. Can I request you to come in a proper reception area?
Sorry, am I audible now?
Yes.
Yeah, okay.
Yeah, apologies. What I just asked was, sir, so typically in a year like FY23, would we mean that our RBOP, which you spoke about an 8% kind of an increase, would largely be driven by case mix and maybe to an extent some price hikes in general? Or if you could throw some light on that.
We do the inflation correction on those things annually. That's pretty normal. And the case mix is something which we would anticipate to drive the RPOPs moving forward. So the price hikes, still Hyderabad have not been done, our insurance tie-ups, pricing. So I think dominantly the case mix and the volumes, and as the maturity goes up, various other parameters kicks in. So that's what is going to drive the RPOP.
Okay. So one more question with regard to the RBOP part was that you already talked about 52,000. And like you said, there is no such impact of COVID or something. And you said that it's business as usual. So an RBOP of 50,000 plus is like a more sustainable number which one can assume. That's a fair assumption to make?
Yeah, I'm sure. Yeah, I mean, this is a sign because as I explained earlier to the previous question that we have the case mix which can drive that.
Understood. So last question from my end on the bed addition. You just gave a number to one of the participants about some 140 odd beds being added. I think those were new beds, if I'm not wrong.
They're all new beds.
Yeah, but if I'm not wrong, last time you probably spoke about that you maybe have a target of adding about 200 odd beds annually. So does that mean that the balance would come in from these existing hospitals, or have we reduced our?
For example, the current financial year, there's going to be a new bed going to be added about 90 plus 55, 145. Plus, we have about 25 beds adding in Hyderabad city. In Bangalore city, in our hub hospital. That's what is going to come this year. So next year, there's already planned beds which are about 140 beds. So there's always going to be bed additions happening in the existing hospitals, which won't take much of time to add it. So that's kind of an average about, it could be 150 to 200, sometimes it can go to 250. It depends on the projects and execution and various other factors.
But as far as new beds are concerned, it's about 140, 150. That's the run rate.
Yeah, that's the run rate. It will go up the run rate as
the existing, it will go up to 200 or 250 depending upon.
Yeah, exactly. 24, 25 because a lot of things are under plan, under diligence on those things.
Understood. And I believe on that.
Prashant, I had one question on this. Good afternoon, Dr. Ramesh. Madan here from Sundaram.
Thanks.
Sir, when you add this new bed in the existing facility, in the existing hubs or spoke, the capex there also is around 50 lakhs or that will be much lesser?
I think it may be lesser. How we look at it is that it depends on what we are going to add. For example, if I'm going to add beds and for the capacity building as well as to what specialty I'm going to start. If I'm going to start cardiac services, definitely it's going to cost per bed is going to shoot much higher because your cath labs, your operating theaters, and those things. So if it's going to be just an addition of the beds, yes, definitely it will be much lower.
But how is it looking like? Whatever we are planning to add this year in Hyderabad and probably next year in the existing facilities. Is it more looking like we are...
which is why you say that, which is why it's kind of a cost between 55 lakh, 60 lakh rupees upper limit. Mind you, there is significant, what we are witnessing is seeing that, there is cement cost, steel cost, even all the materials, especially the electrical, everything has gone up by 20-25%. So we're battling with trying to see that how to optimize the cost to what we have actually promised to do the bed numbers. It's becoming a challenge actually. The price hikes are phenomenal everywhere because of supply chains and various other factors.
Sure. One additional question. The spoke that we are planning to add, like in Anna Nagar, Chennai and Central Hyderabad, all these are on the lease premises, right?
Yeah. Yes.
Okay. Thank you, sir. Wish you best of luck. Really good set of numbers.
Thank you very much. Thank you.
Thank you so much, sir.
Thank you. The next question is from the line of Rahul from IIFL Securities. Please go ahead.
Yeah. Hi, sir. Thanks for taking my question. Sir, can you please comment on your IP and OP volume growth, which we have seen during the quarter on a 3-year CAGR basis?
See, let's look at our OPD footfalls growth. We have grown 52% from the quarter 1 last year to current quarter, 52% of OPD growth, and we have grown by 20% the inpatients growth from the quarter 1 of last year to the Q1 of 23.
Sure, sir. So why I was asking that question is that our base business would have been impacted last year, and hence the growth on that depressed base seems higher. But if you can generally comment on this 20% revenue growth which you are targeting, maybe 8 to 9% of that growth will be driven by ARPOB increases. So the rest can be assumed to be volume growth on account of bed additions?
Both, actually. It's both. It will be both. New location plus the existing locations will have growth in the numbers.
Yeah.
It will be both.
Sure, sir.
As well as the volume growth.
Okay. And given that you are still targeting occupancies north of 50% for the fiscal year, so would that mean that 2Q and 3Q, our occupancies have to be materially higher because of the seasonal benefit which we will see in the portfolio during the second and third quarters?
Yeah. No, yeah, that's what Q2 and Q3 has always been higher occupancies than Q1 and Q4. So the proportion is about there'll be a 6 to 8% variability there between the Q2, Q3 to Q1 and Q4 occupancy together. So because of seasonality. So this current quarter, the Q2 and Q3 will definitely be a higher occupancies. So which is why we estimate about occupancies will probably go past 50%.
Sure, sir. And this 20% growth which you have been talking about, so for FY23, would you have this 20% kind of a growth on a reported basis or adjusted for the COVID vaccine benefit which we had last year?
So Rahul, Rahul, Saurabh here. So when we are saying 20% growth, it is after adjusting for the COVID vaccination revenue. So once you remove that revenue, on that 20% growth is what we are talking about.
Okay, but Saurabh, wouldn't FY23 be a year of normalization, and hence the base business growth should actually have been higher than 20%?
Yeah, Rahul, that's correct. But, we also have to look into account that, the COVID vaccination revenue was 10% of our overall revenue, so 1,000 crore.
No. So Saurabh, I'm saying from a base business perspective. Now, if you say pre-COVID, we were growing at a 20% kind of a run rate. And now, over the past 2 years, our base business has been impacted. Our OP volumes, even if we look at our OP volumes now, those are still trending below the FY20 annualized volume. So given that the recovery which we are seeing in the business, wouldn't the growth on the base business, ex of COVID vaccination, should be higher than 20% this year?
Yeah. See, I'll tell you, Rahul. We see in the children's business, there's nothing like a pent-up demand, like what we see in adult hospitals. What we are seeing is normalcy of our business, both in terms of our case mix as well as the numbers. If you look at our numbers, getting back to our numbers, both in IPDs and OPDs, with the growth of what we used to kind of have the growth of going back pre-COVID level. 20% growth was achievable target, which we have always achieved it. Now coming back into this year, that 20% growth would definitely happen because there's no pent-up demand. See, when there is a pent-up demand, you escalate that growth to a 24-25% or whatever it is. So we don't have a pent-up demand unless in the children's because they are not elective. See, 70% of the pediatric business is emergency based. So pent-up demands doesn't really matter too much to us. It may be very short while. What we have seen pent-up demand is in the previous year, the Q1 to Q3, Q3 to Q4, there was a Q3 to Q2 to Q3 is a good quarter because of pent-up demand, because all the pediatric surgical cases have come back for operations and those things. And those things, in the last 6 months' time, we have been doing all those things. There's not really much pent-up demand. What happens in children is you can't really postpone too much if the surgery is required. You can't postpone for 6 months or 9 months or a year because it may have other effects on the patient.
Sure, sir. So that possibly explains why the growth will be on a sustainable basis for us at around 20%. Sir, one last question from my end. If you can just speak about the profitability levels for Delhi cluster operations, and as well as the due diligence of land which you were pursuing for your hub hospitals in Gurgaon and Noida. Thank you.
So we're continuing to do the diligence. We're taking an approach to either, if the land costs are fair and workable, we would love to buy. And we're also looking at some the brownfield projects. Some of them are in diligence process. But when we look at Delhi, there are properties available, and diligence takes much longer than other parts of the country, and there are complexities. So we are being careful. We would probably we continue to work on that with the various vendors and agencies. So when we have an answer, definitely we'll come back and present probably in the next quarter.
Sure, sir. And just on the profitability of the Delhi cluster?
So we were able to, last year we were able to break even Delhi hospital. This is tracking well this year so far. It's been profitable. It's tracking well. The other one, which is the luxury birthing center, which is been acquired by us 2.5 years ago. So that's the luxury birthing center per se, that we never believed in that as a great business model. We are actually converting to a proper birthing center, so with getting insurances and those things. We managed to get some of the insurance closed. Some of them are still pending. So we're working on that. And also we are trying to get a Rosewalk under Rainbow network. In the sense, Rosewalk by Rainbow hospitals. So that would probably help in terms of branding side.
Sure, sir. So would you be increasing the number of beds at Rosewalk then, given that you are transitioning the facility to a regular birthing center?
This is actually something, an interesting thing. We never believed in a kind of a small mom and pop stores. For us, the smallest facility is about 50 beds. So that's our operating model. The Rosewalk is something which is about 24 beds, which I wouldn't really like to have a hospital with 24 beds. I would like to have a larger facility and a combination of pediatrics and obstetrics. So unfortunately here, it's been, we can't expand it. It's a very ring-fenced space-wise. I can only operate 24 beds, dominantly obstetrics and obstetrics-related work. So nothing much of a significant pediatrics work I can do it, because not much of a spaces left for the pediatric outpatients, emergency services, or ICU services and those things. It will remain to be a birthing center. So that will give us an experience of birthing center as well.
Sure, sir. Thanks, sir. Thanks for answering my question.
Thanks, sir. Thank you.
Thank you. Next question is from the line of Alankar Garode from Kotak Institutional Equities. Please go ahead.
Hi, good morning, everyone. So just continuing on the previous question on Delhi, is now the Madhukar Hospital trending in line with expectations?
Yes. Last year it has broken even actually, and now it is, this year we are expecting it to kind of contribute to the overall EBITDA.
It's doing well this year, and the overall our outpatient numbers are steadily increasing, and IPD revenues are increasing. Our ICU is getting stronger and stronger. So I think we expect the Delhi hospital to do well this year, and it's going to kind of post the positive EBITDA.
Sure, sir. So in that sense, how many years should it take for the loan repayment by the trust to happen towards Rainbow?
It should happen in say next 3 years maximum, not more than that. We'll close it within 3 years.
Okay, fair enough. The second question, sir, was on Bangalore, and I think earlier you called out that there was a higher impact on footfalls at our Bangalore hospitals during the last 2.5 years. But then I think earlier in the call you mentioned that there's almost complete normalcy in footfalls for the network. So just wanted to check specifically on Bangalore. Would you be saying that you mentioned about work from home coming off and people coming back to offices at least 3 days a week? But would you say that Bangalore is still maybe slightly lower as far as normalcy is concerned as compared to your overall network?
I think the Bangalore is largely, what we have seen is that Bangalore has come back largely. I would say that 100%, probably still about come back by 85% to the OPD numbers. What we have been seeing in the last couple of months are very, very significant in Bangalore. So we are seeing whatever we expected the numbers, that numbers we've been doing it. Even the inpatients volumes have grown up significantly. Even our new facility in North Bangalore also kind of having a good occupancies as well as the outpatient numbers. So overall, two things in Bangalore is that so the brand Rainbow is actually penetrating much stronger, and now I think next couple of years the Rainbow is going to kind of play out very dominance in Bangalore city and improve both kind of the case mix as well as the operating parameters.
Yeah. So just to add, Alankar, and give you a slight color on the growth in Bangalore post-pandemic, the outpatient volume at the group level has increased by 50%, as Dr. Ramesh mentioned earlier in the opening remark. But the outpatient volume in Bangalore cluster has basically grown by 100% between Q1 of this year vis-a-vis Q1 of preceding year. So from a 20,000, it has gone to 40 plus thousand outpatient volume in the current quarter. So Bangalore has seen the fastest growth in this quarter as far as the outpatient volume or inpatient volumes are concerned.
No, that's really helpful. And maybe Saurabh, if you can give a similar color on the Chennai cluster as well, that would be helpful.
Yeah. So Chennai also, on the Chennai front, Alankar, the outpatient volumes have grown by 60% in this quarter vis-a-vis the first quarter of last year. So Chennai has also seen a strong momentum in the quarter one.
Understood. And one final question from my side. So we have a broad plan to add about 1,000 beds cumulatively, give or take in the next 5 to 6 years. Now, assuming, say, 60 lakhs of average capex per bed, that would entail a total capex of about 600 crores. And if I add, say, about 150 odd crores of cumulative maintenance capex on top of that, the total capex requirement would be about 750-800 crores over the next, say, 5 years or so. Now, given that we have about 400 crores of cash and we would be generating 80 crores of free cash flow each year, do you think there is scope to undergo further expansion, either organically or inorganically within the next 5 years?
I think that's one important thing is in pediatric this one. The pediatric business, pediatrics is not we cannot aggregate the business in pediatrics. It's an organically built business. So we were able to build this kind of numbers of the beds in if you look at 60% of the beds are going to be added in the places where we are already existing, we are already present, like in Bangalore, Hyderabad, Chennai, and NCR. So the going out and doing in new cities, I mean, it's an organic model. It takes its own time. Number one. Number two is when you have such a large the cash, we can also look at possibly something which is philosophically aligned acquisitions. Maybe that may be another way of looking at it. Probably, we just done the listing. 5 months ago. I think we would probably start looking at it towards the end of the year or next year to see how to deal with that. We need to take a view as a company to see that, the cash is not going to be a problem. We are debt free and we can look at it. Either a kind of small chains or standalone hospitals may be better moving forward in future. So that's something which we need to work on that, either to go organically all the times or to have some acquisitions which are aligned to us, where we can increase where we can operate and build those businesses.
Basically, that be accretive to our EBITDA margin as well as our ROE, ROC.
Yeah.
Sure. No, that's helpful, sir. Thank you and all the best.
Thank you. Thanks a lot. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir, I have 3 follow-up questions. One, when we look at the incremental bed addition, which is, let's say, not via hub, and we have a lot of maturity-driven operating leverage at Delhi, and there's a natural growth. So, if you have to if you have to guide us on what kind of margin expansions do you see on your business model as we go towards the next couple of years or next 3 years, based on this operating metrics that you're putting through for your business? That's first question. My second question is it fair to assume that all your incremental investments in capacity creation are going to come at plus 35% ROCE, considering that it is easily a 2x asset turn business with a high margin? And my third question is, have we drafted any dividend payout plan, because of the free cash flow generation that we have and lack of inorganic growth opportunity?
Oh, thank you. Thank you. I mean, I'll take this question actually. I'll take the last bit first. So, I mean, we've been paying dividends for the last 10 years' time. We've been profitable while growing. So, this is me as a promoter, a doctor promoter, I would like to be profitable while growing. That's absolutely an underlined statement. So, I wouldn't take a kind of a risk to put the business at the moment or in future. That's very, very clear. We always had cash on the balance sheets. Still, we have not, where we could have added more beds, we have not done that. Because there need to be a reason to add the beds. There need to be a business to add the beds. There has to be a kind of a capability to execute and build a model for the beds. So, first 2 questions are actually too complex, too difficult. I think that which means I have to do a lot of guidance to you. Unfortunately, I won't be able to do that kind of guidance of forecasting. But I can tell you one thing. We have been growing 20% year on year while adding the beds. So this has been our going back. I'm talking about last 8 to 9 years time. How we have grown. We continue to grow in the same pace of 20% of the growth, both in numbers and as well as this one. I expect to do the same thing. Continue to do the same thing. In terms of cash flows, if you have been asked earlier question, what they were asking about, you're going to end up in a lot of cash on the balance sheet. How do you deal with that? That's something which I would like to kind of have some time to kind of see that what are the strategic acquisitions we can think about it. If such acquisitions also again, I would put a kind of a company balance sheet at risk, as long as there is a opportunistic where we can add value, where we can add the scale up the operations to get our possibilities, our ROCs, we will definitely be able to do it. So I think we are somebody who is kind of have a very clear thought process and a definitive thought process. What we want to do is very, very clear. So the building of business is very, very important in these 4 cities because as a hub and spoke model, Indian cities are very, very large. Hyderabad is moving forward in probably a couple of years' time. It will be 1,000 beds in Hyderabad. You can imagine that Hyderabad, when you have 1,000 beds, the capacity building I can do in Bangalore, Chennai, and New Delhi could be much bigger. This happens always much faster than we anticipate and expect. And other states which are in actually Rainbow is a household name in the state of Andhra Pradesh and Tamil Nadu. We're going to be in Tamil Nadu. So these 2 states we do a kind of the regional spokes as well. But that's how we look at it, rather than kind of a sporadic going around here and there to do it. Even acquisitions, we look at in a very disciplined way. This is how we look at our business. And what is more important for Rainbow is to build something which has not been there in the country. That is what Children's Specialty Hospital. And we are the people who are going to be kind of building a children's multi-specialty services for the country. And also, there's a lot of opportunity for us to do business within the country, to get the patients from across the country as well as from the international. So this is how we look at it, not only building a cross-sectional country and also building vertical also as we move forward. That's something I can tell you, what is in my heart, what is in my mind, but giving a guidance on year on year is very difficult.
But sir, directionally, do we see margin expansion continuing for some years to come?
We have been traditionally maintaining this margin 25% margin, that is pre-Ind AS basis. We are expecting to do that because we will not do something which will be margin dilutive. So in fact we are expanding. In next 3 years also we are adding about 500 beds. So we will be cautiously optimistic when we add. Actually, definitely we will not do something which will dilute this margin.
But sir, if your lean season margin is 28-29%, which you reported in Q1, obviously the annual margin has to be higher than this, right? Because your main season is Q2 and Q3.
Yeah, we are adding beds actually. So if you see next quarter, we are adding bed as well as in the next couple of quarters. We are going to add about 145 beds actually. So and taking that, the operational losses in the first year of those business as well. So we have to take that margin next. We have to see the margin.
So then,
we talk about a steady state with while adding the beds. Steady state. This is what we were able to achieve and do it. 20% of growth in numbers as well as our what we've been talking about EBITDA margin of
25%. Yes. Margin.
Yeah, but sir, then we have a lot of low occupancy in the system. That occupancy is driving your growth. By virtue of that, you don't want to call out the case for margin expansions building in over the next 2-3 years? Why have the opinion of having a 25% flat margin?
See, there are two philosophical. One is me as a promoter. Margin expansion is very important. The capacity building is equally important, and also building the more services are more important because I'm a pilot project even today. I mean, I want to build this children's healthcare world to look at us. So those are important goals while protecting the investors and shareholders. There are not many important goals are there. So this is a fine balance which an organization which has a lot of opportunity to grow in future, to balance between the growth as well as to the shareholders' interest. That's how I look at it.
Okay, sir. Thank you.
Thanks, sir. Thank you.
Thank you. And now hand the conference over to the management for closing comments.
Oh, thank you very much for all the the analysts and investors who have been very patient with us, and we are happy to answer anyone who has further queries. I think this already information is there for you to connect with our investor relations as well as our CFO. Numbers have been there, so please do get connected to us. We'll be able to kind of answer your questions, further queries. Thanks once again. Hope to see you again in 3 months' time. Thanks a lot. Thank you.
Thank you. Have a good day.
Thank you.
Thank you very much. On behalf of Rainbow Children's Medicare Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.